All right, guys, hello and welcome to this special video with our good friend Manuel Blay at dowtheory.com. In this video, I want to talk about this fascinating and shocking chart and what it potentially means. We're going to talk about with Manuel about the state of gold, the metals market. All right, guys, so join us. So many of you have been asking me, hey, come on, man, let's do a video on gold every now and then. You got it. Here it comes. The bottom line is what's interesting about gold, and I'll just put up the chart so you can see it. And you will see gold is showing to us, based on Elliott wave theory, a pattern that shows to us we got waves 1, 2, and 3 completed there back in 2020. Going back to 2016, we got wave 3 completed there likely back in 2020. Then a pullback, an ABC correction, as you can see there. And yeah, and by the looks of things, the C wave of 4, so that's the ABC in yellow. That's the ABC you can see there in yellow. And that means the C wave of 4 either is already completed, or if it hasn't completed, it may complete near the 200 weekly moving average. We shall see. Again, that depends on what gold does in the next several days and weeks. So we have a resistance on gold at the 1793 level. All right. And what does that mean? It means if gold can manage to, I mean, so far we've had a nice rally in both gold and silver, but if gold can manage to get above 1793, 1800 in the next several weeks, let's say we get another pullback, and let's say we finally break through in a strong, sustained fashion above 1793, 1800 level of resistance, I think it could mean that the wave C of 4 in that wave count is likely completed here, and that could set us up for a wave 5 projection to higher levels. By the way, we'll talk about the wave 5 projection and the targets for wave 5 in our member videos. What's your view on this, Manuel? What's your view overall on gold? Do you think we're getting close to a potential bottom here, or do you think it's already bottomed? What's your view on this?
Two things. First, the current rally does not qualify as a secondary reaction. So in other words, it's too early to say it has bottomed. If we get some 3 or 4 days more of bullish action, then we would be in a secondary reaction. But a secondary reaction doesn't make a primary trend. It would simply mean a reaction against the still existing primary bear market. However, if I tell you my chart, if the June 10th highs were both broken up by both silver and gold, you know, I always take 2 indexes.
Yeah.
Then I would turn bullish until, furthermore, maybe we get a setup for a primary bull market at a lower level. But at this very moment, the rally does not even qualify as a secondary reaction. So it means that for the time being, when I look at the charts, I see a primary and secondary trend bearish. This is what I see right now. The good news is that we have reach what I would say capitulation levels. So in the past, when in the last, I think was 19 weeks from the last highs, there has been such a huge decline by both silver and gold, a nice rally has followed. So you know that sometimes I use capitulation. I'm a trend follower, but very exceptionally, I know when to catch a falling knife.
Yes.
The trend is still bearish. Primary and secondary trend is still bearish. Maybe we'll change the secondary trend to bullish in 3 or 4 more days if we have a higher high. But the good news is that I've seen really capitulation conditions around the lows. But you know that when we reach capitulation, I never go full. So I have some SLV, the ETF, I have some silver, but always is a small commitment because I want to see the trend turning bullish.
Yeah.
This is my assessment right now.
Absolutely.
Bearish.
Yeah, as a matter of fact, I own gold and silver physical. I'm a big believer in physical gold and silver. I own gold and silver, as a matter of fact, and I've been buying on this way down a little bit. I've been nibbling on the way down when gold and silver dropped, again, physical. But yeah, but I would say this, if gold hasn't bottomed, if gold makes another lower low, I'll be watching that key level of support, which I showed earlier, and that's going to be at 1700 to 1660. So 1700 to 1660 and near the 200 weekly is a level I'll be watching very closely, because if gold drops to that zone, if gold drops that zone and then bounces from that level, we see capitulation, we see a strong bounce from that. It could mean a bottom is in place near the 200 weekly for the wave C of 4. On the other hand, if gold blasts through, if it blasts through resistance at about 1790 through 1800, then fine. I will have to say the odds increase for a potential bottom there as well. But we shall see. Some interesting charts you sent me as well, Manuel, which I think is worth mentioning. And I think these are the the June highs that you mentioned. These are on GLD and SLV. I'll just quickly show that here. I think these were the June highs, correct, Manuel, that you mentioned?
The blue horizontal line, once again, these are the June 14th highs.
June 14th highs.
Yes, for gold.
So if it breaks that level, what does that mean to you?
If it breaks that level, is a bull market. It's a new primary bull market, sure. But maybe we get an entry level or a primary bull market level at a lower level if we get a secondary reaction soon.
That's true.
But for a time, because you know it changes with price action, our price starts to change. So right now, these are the key levels that would signal a primary bull market. But maybe, most probably, we will get a primary bull market at a lower level. But this is the situation right now.
Okay, guys, please do check out the DowTheory.com's newsletter. Manuel Blay is the editor. Fantastic. It's definitely worth it. You get a 25% discount with this special promotion. The DowTheory.com/LT. Do check it out. I'll put the link for you guys in the description as well. You've been really fantastic, Manuel. Thanks for being so patient and answering all the questions and everything else. And
you're welcome.
Really appreciate it.